Welcome back, hunters, to the Daily Hunt for Multi-Baggers. It's Thursday, September 25th, 2025, and what a morning we have in store. I'm Ethan, and with me as always is the sharp-eyed Brooke.
Great to be here, Ethan. Our AI crawlers were certainly busy overnight. We've got a fantastic amount of data covering quite a few different stocks. Some clear leaders are emerging, but I've got to tell you, a lot of what we're seeing today is looking pretty risky, purely based on the underlying financial health.
Oh, come on, Brooke. Risky is just another word for potential, if you ask me. Our AI has flagged some really interesting patterns, showing where the community's energy is building. We're talking about some high-octane speculative analysis coming your way. So let's dive right into what's heating up the market discussions. All right, let's kick things off with a familiar powerhouse, NVIDIA, symbol NVDA. The chatter around NVDA continues to be overwhelmingly bullish. The community sees them as the undeniable leader in AI infrastructure, especially with mentions of their Blackwell GPUs. Plus, those analyst price targets keep climbing. Their revenue growth is just astounding, and profit margins are through the roof.
Ethan, I totally get the excitement around NVIDIA. Their numbers are impressive. Revenue growth at over 55%, profit margin over 52%. But let's remember, their price-to-earnings ratio is still around 50. While justifiable for their growth, it means a lot of future success is already priced in. High beta at 2.102 also means it's incredibly volatile. It's a buy based on its incredible fundamentals, but it's still a high-stakes play given its current valuation.
Fair point, Brooke. Now, let's talk about Alibaba, BABA. Our AI picked up a lot of bullish sentiment, especially with their huge AI budget hike and that NVIDIA partnership. The community is feeling positive, seeing it as a top-performing China tech stock. Some are calling it potentially undervalued with a very low price-to-book ratio.
Yes, the social chatter is definitely positive, but here's where my risk management hat comes on. Despite all that AI excitement, Baba's revenue growth is a low 1.8%, and news reports indicate their free cash flow has actually turned negative due to all that spending. And let's not forget that extremely high debt-to-equity ratio of over 23. That's a huge red flag. It's a stay away from me. The financial strain for that AI gamble is just too high right now.
Speaking of high-octane plays, Tesla, TSL, is always a hot topic. The sentiment is still very bullish on the street. People are just convinced Elon's vision, especially with robo-taxis, will push it to new highs. Analysts are raising price targets, and frankly, people just don't want to bet against it.
And that's precisely the problem, Ethan. The market seems to be completely ignoring the fundamentals. TSL's price-to-earnings ratio is an astonishing 263. And get this, revenue growth is actually negative at negative 11.8%. Plus, the debt-to-equity is exceptionally high at 16.8. While it might continue its run on sentiment alone, investing based on those KPIs is a textbook definition of high risk. It's a definite stay away for any risk-averse investor.
Okay, I hear you, but sometimes you have to look beyond today's numbers, right? What about Intel, INTC? The community is buzzing, with many believing the U.S. government is actively propping them up to compete with TSMC. Shorts are covering, and people think it's headed to the moon.
While losing money, Ethan, Intel's KPIs are deeply concerning. Their net profit margin is negative 38%, and their earnings per share is a dismal negative $4.77. Revenue growth is practically flat at 0.002, and their debt to equity is still high at almost 48. While there's a strong narrative, the financials suggest a very slow uphill battle. For now, it's a stay away until we see some actual profitability.
All right, let's switch gears to EOS Energy, EOS. This company has a strong story. Users see its zinc aqueous chemistry and American supply chain as game changers, especially for powering those booming AI data centers. Many are calling it a future multi-bagger.
Multi-bagger potential is exciting, but current reality is crucial. EOS is deeply unprofitable, with an EPS of negative $4.73 and a negative price-to-book ratio. That means liabilities exceed assets, a serious financial red flag. An analyst from Jefferies just put a price target significantly below its current price, and we're seeing insider selling. This is pure speculation, not sound investment, so stay away.
Let's discuss GAP, G-A-P. This one has a unique social media angle. A viral K-pop ad campaign on TikTok and YouTube is generating massive buzz, with some comparing it to American Eagle's past success. The community believes the market hasn't priced in this viral momentum, especially with a low P/E ratio.
It's a fun narrative, Ethan, but the fundamentals scream caution. Gap's revenue growth is practically zero at 0.001, meaning the core business isn't expanding. More critically, its debt-to-equity ratio is an alarming 162.89. That's incredibly high financial leverage. A viral campaign might boost sales, but it's a big if, and the company is too financially stretched to make this a confident play. Definitely stay away.
Finally, let's touch on asset entities, ASST. Our AI flagged some really interesting, albeit conflicting sentiment. On the one hand, some are calling it a pump and dump, but others are getting very bullish on potential short squeeze opportunities due to extremely high short interest. Plus, they've added Bitcoin to their treasury.
This stock is a prime example of high risk, Ethan. It has zero net profit margin, zero operating margin, and negative EPS. The price-to-book ratio is an eye-watering 18.58, suggesting extreme overvaluation for an unprofitable company. News even reported its crypto stock crashed after a major deal. A short squeeze is a gamble, not an investment thesis. This one is a clear stay away.
All right, hunters. Based on today's AI-generated insights and market commentary, here are some candidates to consider for your deeper research. Investigate as buy, NVIDIA Corporation, NVDA. For those who see potential in a narrative, despite some challenging KPIs, Brooke and I have identified one for a cautious look. Investigate as cautious buy, Alibaba Group Holding, BABA. Brooke, and for our high-risk tolerant listeners, if you're looking for a true speculative gamble where community optimism truly outweighs dire financial metrics, this stock was a clear frontrunner from our stay away discussions today. Investigate as speculative gamble, Tesla, TSL. And that wraps up another episode of The Daily Hunt. Just a quick reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Absolutely. Listeners should conduct their own thorough research and, if necessary, consult a licensed financial advisor before making any investment decisions. The market is a wild place, and knowledge is your best asset. We are not responsible for any losses incurred.
Thanks for joining us. We'll be back tomorrow morning with more fresh insights to kickstart your day.
Until then, happy hunting.